dig up stupid, and that whole idea of, you know, how do you dig up? You can't dig up, and I feel like that's what this $700 billion bailout was meant to do. It was meant to borrow their way out of debt, a plan that I just think is flawed to start with. So we're in a situation now where there's so much fear running around the markets. It's just ridiculous. There's panic selling, and we've seen it multiple times when just by looking at the Dow, and you can see how much it's getting smashed because people are so fearful of what's happening. They're just selling just to get out of the market, and that's really exacerbating the problem. I think we as humans, we tend to overreact in these fearful situations. It's that fight or flight, that automatic response, and you know, people just want to pull their money out of the market. The thing is with short-term markets, when you're looking at short-term market movements, it really is driven by a lot of emotion and the way people are feeling. On a longer-term view, if you zoom out, the longer time frame that you look over a market, the less emotion is involved. But on a very short-term basis, emotion really is what drives the market. And that's where we're at right now. And I think if you look at what is happening in the market now, it's not necessarily an accurate representation of what's going on or the valuations of certain companies. Really, there are great companies getting caught up in this whole situation, and good companies are getting pulled down with the rest of the market. And similar to when we look back to what happened with the internet boom and how you know, all of these companies got bidded up just if it had the word .com at the end of the name of the company, and then everything crashed back down. But we were at a situation where the good companies were sort of rising to the top, and those companies that were making money are the ones that have started to get people's attention because, you know, they're good, solid companies. And I think we're at that situation again where good companies are getting pulled down by all this fear of what's going on, and I think that does represent a good opportunity for some people. If ever there was a great time to look for opportunity and who you should listen to, I think going to some of the greatest investors of all time is not a bad place to start. And Warren Buffett, I listened to a recent interview with him, and he was talking about the situation and the current climate in the market. And Warren had been talking about for many years now the pending doom that was building up with how much debt everybody was taking on, and how the different companies were getting overvalued, and the valuations weren't necessarily justified for the selling price that the company was going for. And what he did is he actually had been building up his cash reserves in his Berkshire Hathaway company, and they've been sitting on cash reserves waiting for this opportunity to pounce, because now as everything crashes down, like I said, good opportunities start to rise to the top as these good companies are getting pulled down with the rest of the market. Now Berkshire Hathaway just recently posted their third consecutive quarterly loss, but Warren Buffett doesn't really seem that worried, because it does represent good opportunities for those who know what it is to look for. And similarly, I had some other statistics. Marty Wittenman's fund as well, a very well-known fund manager, his fund is down 19% from the year to date. But I think even with that in mind, these smart, sharp investors know that this just brings opportunity. And I hate to say I told you so, but for those who've been clients and long-time watchers of the work that I do, I did mention probably about 6 to 7 months ago in one of my newsletters that my long trading system was not throwing up as many buy signals, and there weren't as many opportunities to buy, especially as the top of the market started to taper off. Those opportunities really did start to dry up for me, and I stood out of the market because I know I follow my system, and that all comes back to the idea of having a system and making sure you follow it. And I think that's a topic for another day, but the importance is you need to realize when these markets fall, it doesn't just happen overnight. You don't wake up one morning and see the share price having dropped 50%. The market does start to top. There are warning signs, there are signals. You just need to know what it is that you're looking for and not get caught up in that short-term hype of the markets and just go with your gut emotion. That's when you come into trouble. But again, coming back to the great investors, Warren Buffett thinks it's a fantastic time to buy, and I think there are going to be some opportunities shortly. That said, unlike Warren Buffett, who says, that now's the time to buy, I don't feel we're at the bottom just yet. And I always like the idea that, or like the saying, just because it's cheap doesn't mean it's not going to get any cheaper. And I think we are close to the bottom. I think it's not far off, but you don't want to catch or try and catch a falling knife. Don't try and spot the bottom. Don't try and pick the bottom. You always hear people say if you try and pick the bottom, you're going to get a dirty finger. And I feel like trying to pick and call the bottom is almost like trying to predict what the market is going to do, and you can never predict what the market is going to do. You should always react to the information that's coming out, the price data, and look to the market to tell you when it's bottomed. I think we need to wait for stability. I'm looking for 2 to 3 months of some market stability before I would consider moving back into the market and then looking for those opportunities that I talked about. That said, I do feel like the market isn't far off, and here's why. Firstly, if you look at corporate valuations, finally, many of the corporate valuations out there are much more reasonable than they used to be. A lot of them were overpriced and overvalued just because people had too much money, and that's what happens in booms. Things get bid up just because everything is rising at that particular time, and all boats float on a rising tide. And I think corporate valuations now are at a much more reasonable rate from where they've been for many, many years. Another thing to look at is consumer confidence. Consumer confidence is very low at the moment. People are scared, they're fearful of what might happen next. And I'm a little bit of a contrarian, I suppose. I think most people don't make money when it comes to the market, investing or anything. As a general rule, the masses are wrong, and I think by going against the flow, you've probably got a greater chance of being right. And when I see the consumer confidence so low, I get excited because I know opportunities are just around the corner. The other thing I read interestingly the other day was in regards to the cash levels, and I'll just make sure I've got my notes right on this. I'll just bring up here. I've got here that we're seeing record cash levels. Cash in the money market funds are now almost at 30% of the total US stock market value, and that's people shifting their money back into these money funds. The cash levels are so high at the moment that people are pulling money out of the market left, right and centre, like I talked about. They're stuffing it under the mattress. They're going for those more secure investments, and I feel like that really is a signal that we're not far off from the bottom. And finally, there's something I call the taxi driver index, and people talk about this in bull markets, and when a market is going gangbusters, and look just back recently to the internet boom, as things were going gangbusters, you'd hop into a taxi cab and you hear the taxi cab talk about the investments and the shares that he was owning.